How to avoid a scam. Unfortunately, the explosion of ICOs and other crypto funding in recent years has also led to increased scams and fraudulent activities. As a potential investor, it is important to be aware of these risks and to take steps to protect yourself. Unfortunately, the explosion of ICOs and other crypto funding in recent years has also led to increased scams and fraudulent activities. As a potential investor, it is important to be aware of these risks and to take steps to protect yourself. How to spot potential scams. Before investing in any funding, it is important to do your due diligence and thoroughly research the project and the team behind it. Look for information about the team's experience and track record, their technology or product viability, and any partnerships or collaborations they may have. A functional prototype or MVP, minimum viable product, is a strong indicator that the team behind the finding is serious about their project and has a working product in development. In some cases, ICO and other funding scams have been perpetrated by individuals using fake identities or impersonating legitimate team members. To protect yourself, it is important to verify the identities of the team members through their social media profiles, LinkedIn profiles, or other sources. Be wary of token offerings that make unrealistic or exaggerated claims, have a vague or incomplete white paper, or have a lack of transparency about their operations. These can all be red flags that signal a potential scam. Red flags to watch out for. Fundings with an unclear or overly complex business model could be a red flag. If its business model is difficult to understand or seems overly complex, it may be a sign of a potential scam. Fundings that do not have a functional prototype or MVP are a higher risk investment. It is important to look for a working product before investing in a token offering. If the team behind the funding is not transparent about their identities or backgrounds, this could be a sign of a potential scam. It is important to verify the identities of the team members and ensure that they are transparent about their backgrounds. If their white paper appears to be copied from other sources, this could be a sign of a lack of effort or authenticity. It is important to carefully review the company's white paper and ensure that it is original and well written. Final tips for protecting yourself from scams. 1. Don't invest more than you can afford to lose. Token offerings are high-risk investments, and there is always the possibility of losing your entire investment. Only invest in what you can afford to lose. 2. Use a secure wallet. Make sure to use a secure wallet to store your tokens after the funding. This can help protect you from hackers or fraudsters who may try to steal your tokens. 3. Don't trust anonymous team members. Be wary of token offerings that have team members who are anonymous or use fake identities. This could be a sign of a potential scam. 4. Don't fall for the hype. Be cautious of fundings that use a lot of hype or make unrealistic promises. Remember that there is no guarantee of success for any token offering. 5. Don't be afraid to ask questions. If you have any doubts or concerns about a funding, don't be afraid to ask questions or do additional research. It is better to be safe than sorry when it comes to investing your money. Remarkable crypto funding scams. Plexcoin. Its ICO raised over $15 million from investors in 2017. The company behind the ICO, Plexcore, made false and misleading statements about the returns that investors could expect and the timeline for the development of their product. The U.S. Securities and Exchange Commission, SEC, eventually charged the individuals behind the ICO with fraud, and the company was ordered to pay over $10 million in fines and restitution. Centratech. Its ICO raised over $25 million from investors in 2017. The company claimed to have a partnership with Visa and MasterCard and offered a debit card that could be used to spend cryptocurrency. However, it later emerged that the company had made false and misleading statements about its partnerships and technology, and the founders were eventually charged with fraud by the SEC. Pincoin. Its ICO raised approximately $660 million from investors in 2018. The company behind the ICO, Modern Tech, promised investors high returns and assured them that their investment was safe. However, it later emerged that the company was operating a Ponzi scheme and had no real product or technology. Many investors lost their entire investments as a result. OneCoin. OneCoin is believed to have defrauded investors of over $4 billion. The company, led by Ruja Ignatova, claimed to be a legitimate cryptocurrency but was actually a Ponzi scheme. Many investors lost their entire investments as a result of the scam. They operated by recruiting individuals to sell education packages that included tokens that could be used to mine OneCoin. However, the tokens had no real value, and the company was not actually mining any cryptocurrency. Instead, the company used the money it raised from the sale of education packages to pay off earlier investors and give the impression of legitimate profits. BitConnect. Its ICO raised over $2.5 billion from investors in 2017. The company claimed to have a sophisticated trading platform that could generate high returns for investors. However, it later emerged that the company was operating a Ponzi scheme and many investors lost their entire investments. Conclusion. These examples illustrate the risks and challenges of investing in ICOs and other types of crypto funding. It is important to do your due diligence and be cautious when considering investing in a token offering, as there are many scams and fraudulent activities in the market. By following the best practices we mentioned in this section, you can reduce your risk of falling victim to a scam. Crypto investment involves significant risks. Please proceed with caution. The course is not intended as investment advice. The course is created by the author who has joined GateLearn. Any opinion shared by the author does not represent GateLearn.